Tom here, Flip Anything USA. So you're in for a treat. This is a video. It's in 4 parts. It's my good buddy, Doug. He's been investing longer than I have. We both made our fortunes investing in real estate. Both of us started in our 20s, been doing it a long time. I've been doing it 40 years. He's been doing it even longer. I think you're going to enjoy it. Both started out in California. So please subscribe to this channel. It helps the channel. If you enjoy the content, let me know. Also, comment and like. Enjoy the show. I talk about you all the time, Doug. I reference you, when I talk about lessons learned, and so it's really cool to have you on. And so I should just introduce you. So I've got a good buddy of mine I've known for almost 40 years, is Doug Campbell. He's a real estate investor. He was investing before I could even buy a piece of real estate. Not that he's that much older than me, but he's older than me. But we've known each other a long time, and we became fast friends through a friend of mine.
While I'm training, he's watching. We were talking about how you get what you want in life, and basically I was saying that no one teaches anybody really how to think, number one, how to solve problems, and then, because whatever they do, it doesn't matter if you're going to be a plumber or a real estate guy it doesn't matter. You have to have the same process, from you have to have the desire, you have to have you have to have the focus. You just have to, the same steps are required no matter what you do in life. That's the only way you can get what you want. And I was saying, and then you have to realize too that failures are probably way more important than successes, because if you're successful, you don't have to do anything. But it's when the failure starts coming that you have to really start learning stuff.
Yeah.
And I was telling him about you. I said, I have a buddy that I don't know how many damn businesses he's been in, and he's failed at a lot of them, but he's won at a lot of them too. And I said, and it doesn't faze him. He's got this quality about him that he just shrugs it off. If he tries something, but he's got that confidence. He's got the same process. He uses the same process. He digs at it, and then works. It works. If it doesn't, it doesn't. So.
Right.
Anyway, I was bragging on you a little bit there.
Well, I appreciate it. Thanks. Well, Doug was into real estate very early, just like me. And so, in fact, I followed him when he moved from Santa Barbara. Doug used to have a beautiful home on State Street. And I remember when I bought a building from Mission Linen. Mission Linen did clean uniforms and stuff, and their corporate headquarters was in Santa Barbara. And I lived about 2 hours away out in the desert, but I thought, I'll go see Doug. And so the day I went and got my papers signed, I came up. Doug had a carpet store at the same time that he was buying up real estate. And I remember we went and had a drink, and we went down to he had a big sailboat. He had a big old sailboat. We went down and sat on that for a little bit. What was that sailboat? How big was that thing?
It was 37 feet.
Oh yeah. It was a nice, beautiful sailboat. And I remember you explaining to me that somebody had to come and clean or treat the teak wood every once a week or something. Otherwise it goes to hell or something.
Yeah, it was like every 3 months. I didn't know that when I bought the damn thing.
Yeah.
No, they're high maintenance. Some of these. Never buy a boat with a lot of wood on the outside.
He's been a great role model for me to follow and bounce things off of. And so I thought, we started talking, and me and Doug had a conversation a couple weeks ago. And then I said, you know what? I just hate that we're not sharing this conversation with the class. And so I called Doug a little while ago, and we started talking. I thought, you know what? Let's just do a Zoom. I don't want to waste this conversation. So now we're catching up again a little bit, and you guys get the benefit of hearing that and hearing some of the things we talk about, because everything we talk about, we have a common interest. We both like to make money, and of course, and we share everything, family and other things too. But mainly, what one of the things that we have the most in common with is that we're both real estate investors. And so, people talk about a crash and this or that, and we'll talk about some of that stuff too. But anyways, thanks for coming on, Doug. And this will be a treat. It really will be. I'm just glad that, we're going to have a record of this too.
Yeah, it's nice.
One of the things I was sharing with Doug is, Doug told me a long time ago, he was selling some properties. This is probably 20 years ago. And I said, man, when he was getting out of town, not Santa Barbara, when he was kind of leaving a Texas town we both were in. And I go, you're leaving. I mean, got these investments here. You sold some of them. And he goes, yeah. He goes, yeah, but if I'm, as long as I'm selling them at the top within 20%, meaning he may not get it at the tip, but as long as he's within 20% of the top, he doesn't feel too bad. And that's always stuck with me, and it's like another mentor of mine or somebody I admired, like I do, Doug, had told me. He was also successful in real estate. His name was Hank Booker. And he always said, hey, you never get hurt taking a profit. Okay.
No, that's for sure.
Yeah, it's good advice. Such short words mean so much. But Doug had said something again, kind of profound to me a little bit ago. And that was, we were talking about whether we're going to have a crash this year or not. And I told him, I don't usually like to forecast. I certainly don't like people pinning their decisions on me, on what I tell them, because I don't want the responsibility. I just don't. And I'll take chances myself, and I'll share people with the chances that I take. But in all honesty, with this change of administration, I think there's I like the previous administration. I thought was kind of good for the economy, a lot of good things for business for me. But what's really good for us as real estate investors is that Biden has already said pretty much they're going to let people not pay their rent. People are going to stay in homes, and they're not paying their rent. They're not going to get thrown out. So they can't be thrown out of their homes. And so, and I haven't kept up with it totally, but they're obviously not going to be foreclosing on the people that are in these homes either. So
supposed to be 9 million of them, supposedly.
Yeah, I know. Yeah.
I don't know if there's that many, but.
Well, no, I know. But what's so great about this to me, Doug, is that all my houses have gone up about $100,000 in the last 6 months. It's just crazy. So maybe back to my point, what Doug said is, like, we were talking about how fast the values are going up, and Doug acknowledged that the areas that we both have a common interest in have already set like a record, gone up 20, 25% like this year. And I can tell you most of that was in the last 6 months, right? Is that I shouldn't feel bad taking my lumps on the taxes. In other words, because I was telling them I need to defer out of this property and save some money, and because that's what I usually do, 1031 exchange. But really, like Doug said, the gains that we made this year on our assets that we were willing to sell last year, the gains that we made on them this year will pay the taxes, right?
Yeah.
Yeah. So in other words, and I thought that's a perfect example, because the property that I couldn't sell last year for $449, I just sold for $575. And my tax burden on that property is about $120,000. So
you don't feel so bad if you're selling fluff. I mean, you're giving fluff to the government or selling fluff, because you're going to eat it anyway if you hold it for too long.
Yeah, I got to go. I mean, you got to pay taxes. There's no getting around the taxes. But I thought, what a great way to think about it. I thought, you know what? I shouldn't feel bad paying the taxes. I mean, I shouldn't work so hard to defer it, because cash is king. We both talk about it. And, me and Doug know firsthand, we both came to an area that was devastated. The economy was devastated.
Well, I'll say.
Yeah.
It was like a candy store.
It really was like a candy store. It really was. I remember I had already bought a lot of real estate. Doug had already owned a lot of real estate as well. Both of us in California. And I go, you went to Austin? And then me and a buddy came up, one of Doug's relatives, and Harold. We came up, visited Doug, and I was here like 3 or 4 days. I said, I'm moving. And I call, and within 30 days, I moved to Austin, because, like you said, it was kind of a candy store. Oh yeah. But it was the fact that Doug had come up here. I mean, he sold a home. He was right on State Street in Santa Barbara. They're not a better, he had one of the prettiest homes that were there. It was a big, giant, old 2-story. I don't know when that thing was built, probably the 30s, right?
1926.
Wow. 1926. And it was a gorgeous place. And I thought, well, if he sold his home on State Street and lived in Santa Barbara, which is like paradise, it doesn't get any better than that. I thought, then I got to go check out Austin.
Yeah, it's very interesting how I had a friend, somebody came to he and I and wanted to tell us about this place called Austin. And he was explaining, everything that's gone on here. And it's basically trying to raise some money, basically to buy some property.
Mm.
So we listened to his spiel, and as soon as he left, Charles and I looked at each other and we said, we got to go to Austin. And so
Yeah.
we got on a plane and and wound up in Austin. I thought, God, what a beautiful place. And then everything that I thought was going to happen in California had already happened here in Texas. So when I got home, I think we'd closed my business and sold my house and moved my family here within 90 days.
Yeah.
And I
Yeah.
haven't left, and that was 30 years ago.
Yeah, yeah. It was quick. He left so quick that I'm like, "Wait, you're not in Santa Barbara?" And it was like, wow. Yeah. And that goes to also, wouldn't you say, for people watching that, young investors or new investors, you got to move quick, right? Be decisive and go. And, that's what I always tell people. You got to know value. And obviously you knew value as soon as you saw what was going on in Texas, and me too. And, but yeah, it's moving fast and taking action is so important. And that's the advantage you have if you have a passion for real estate like Doug and I do. We know value, and so it's easy for us to say, "I'll take it." And the fact, and you say you'll take it, and then you mean it, you'll sign it, and they sign it. Now it's done. Now you just got to worry about where to get the money, and that's usually the easy thing to do if you got a great deal, right?
Yeah.
So hey, Doug, let's talk about when you first started. How did you start in real estate?
Well, I'd remember the first book I read was about Aunt Toby's. And an Aunt Toby is an old house that they converted into little apartments. So, and I was young. And they're in different cities. A lot of older cities have these old houses you'll see them with several mailboxes on them. And basically, originally they were a house, but they had a lot of people had a lot of kids in the old days. And so they had a lot of rooms, and they'd rent out rooms and whatever. And I read a book by, I can't remember his name. He was How to Make $1 Million in Your Spare Time. The guy was a postal delivery guy. And I read that book, and he spelled out what you do, how you look in the paper, and how you tell if it's a good deal or not. And then, so I got all excited about that. And so I started reading these, some books about this stuff. And then eventually he wrote another book about how to make $3 million or $5 million in your spare time. But
He just kind of does it as he makes it.
yeah. But he set down exactly what you do. In those days you didn't have the computer. You had newspapers. You'd look in the paper and you'd go his little rules. You'd follow his rules.
The thing he fell off with, he said he had a set of rules to follow. Probably
Well,
just check every day.
And it was, and it was, and you can't do this business without knowing your numbers. You've got to know, you know, that's a really big deal here. And I might comment that not only in real estate now, but even in the financial world, fundamentals have just fallen away. I mean, everybody's on this, if it's more today, if it's more than today, it's going to be more tomorrow. It's going to be more the next day, the more the next day. And there's no foundation under all of this stuff. And
Right.
the farther this stuff goes away from the foundations that keep it, or reason it exists, then the more it's going to fall over. And so I've always made most of my money in bad times when things have, because I can see things coming. You have to have some baseline. And the reason people don't focus on this thing is because who the hell's paying for these properties you buy? It isn't you, it's
Right.
the tenants. It's the tenants. And they you can hype a property, 1, 2, 3, 4 times the price. But when it comes to value, which reflects on who can pay for it, now you've got this big difference going in. that can go away so fast. So, you know what I mean?
If you haven't seen it, though, you don't know that can happen, right?
Well, right. But yeah, and when you talk about how we know when something's worth something, is I started with multifamily properties, and then I kind of drifted into, you know, office and retail, just so I'd have more things to look at. If you're just looking at one thing, then you don't have as many opportunities. So I try to learn several different areas. It's all those have different metrics, or you know, that you want to watch out for. But of course, the most solid to me is multifamily, because everybody's got to live somewhere,
Mm-hmm.
you know. And but anyway, I just started off real small. I was working on the beach, and the market started, was the 70's when inflation started going, and you could buy a little house. I was trying to convince people. I was a real estate. I bought a house on the beach for $28,000.
Is that Ventura or
Hollywood Beach.
oh, Hollywood
Yeah,
Beach? Okay, so
yeah,
Channel Islands. Yeah.
yeah. And the lady who sold me the house, she liked me and she knew I wanted to get into real estate, so I started working in her office. And so the people would come to me, and I'd try to explain to them how good a deal something was. You know what I mean?
Sure. Sure.
I remember I wore out. We had one of those new calculators, LED calculators. You know, they used a lot of battery.
Yeah.
And I think I wore out my battery trying to show them why they should be buying this place. And it was so frustrating. So I figured after that, I said, I'm on the wrong side of the desk here.
Right. Yeah. Why beat it? You're trying to convince them something you know to be true, and it's like
So yeah, so I didn't like trying to convince people to buy stuff, because when I knew something was a buy, so I started buying stuff. I bought a lot at the beach for $4,000. I remember,
Wow.
and I was so stupid. I bought it on a contract, which meant that if I didn't make my payment every month, they could just take it away.
Oh, it was a contract for
Because they owned it. Right? They didn't transfer the title to me when I bought it. But anyway, I got so excited when I sold it. I think I bought it for $3,000. I sold it for $6,000. I'm like, gosh, this is really exciting.
Yeah. That's in the 70's now. Yep.
Then I bought a little 3-unit with an old house in front of it, you know.
Mm-hmm.
And I think I paid $50 for that, and it went up to 120 or something in a couple of years.
Yeah.
And then then I bought about 6 or 7 duplexes on a big lot near another beach, Point Wainimi. Then I bought a place that was retail below and a lot of little apartments above.
Oh, nice.
Ventura. Every time it got a little bigger, you know what I mean? I bought a 26-unit apartment building.
Well, I hope you enjoyed that. Please subscribe and like if you enjoy the content. It helps the channel. And thanks for watching.